Hi everyone, let's go over my medium time frame, low time frame and micro bullish and bearish Elliott Wave scenarios on Bitcoin. Starting with the medium time frame bullish scenario where we are looking for a finished wave 1 or A finished wave 2 or B for now, then continuation to the upside in a bigger wave 3 or a bigger wave C. In this scenario, the low of wave 2 or B has been made around the 0.5, which is a common target for both the wave 2 and the wave B, pulled from the low to the high of 1 or A. And also we have an important support resistance area over here for some additional confluence, for this then being a potential low and looking for upside. That does mean that from around this area, we are then looking for impulsive structures to the upside, because a wave 1 will have a 5-wave structure impulsive move to the upside, before then a corrective 2 and continuation in a bigger 3. As long as we are not seeing any impulsive structures to the upside, a bullish scenario is going to be less likely. If we then zoom in to this structure and look at the low time frame scenario that then results in this being the low, we can think about a WXY, a double zigzag structure, where over here we then have a zigzag to the downside in a wave W, where wave C went to the rare target, which is the 0.618 pulled from the high to the low of A to the high of wave B, followed up by a WXY sideways double combo in wave X with a flat in W, X any correction, and Y a double zigzag, or a zigzag, sorry. And then in wave Y to the downside, we have another zigzag in a wave A diagonal, B a zigzag, and then another impulsive structure to the downside in a wave C, where locally the most common target for wave C is between the 1 and the 1.236, taken from the high to the low to the high of this wave B. And as you can see, price is currently ranging right on top and right about this area. And the 0.618 is one of the targets for a potential wave Y, in that this being a W, X and a wave Y. The 0.618 target is a little bit less common than the 1 to the 1.236, which is further down below, but it is a target nonetheless. If we then look at this wave C to the downside, we have to think about a 5-wave structure, because an ABC is a zigzag, meaning a 5-3-5 wave move to the downside here, where then if we zoom in to the lower time frames and try to have a look at how we could potentially count this as a 5-wave move, then we have to think about an extended 5th wave. In this scenario, wave A is then a diagonal, zigzag in B, right, and then a 5-wave move to the downside in wave C, where you can see the highest volume at the moment is at the low of a wave 5. That is quite uncommon, not what you want to see, because even if we think about a potential wave 5, what you prefer to see is the 5-wave structure in a wave 5 ending with less volume. So basically what I'm saying here is that if this is the candle with the highest amount of volume, then it would be better for price to make another low on lower volume, so that this can then be a wave 3, wave 4 and a wave 5 that then ends wave 5 and therefore wave C over here, but that is yet to be seen. As I counted it at the moment, from the high of B, we then have a wave 1, a 2, and then over here a wave 3, which then is a 1, 2, 3, 4, and a 5. There's no overlap between the wave 1 and 4 over here, and also no overlap between this wave 1 and this wave 4. And wave 3 is a little bit longer than wave 1, because wave 3 is not allowed to be the shortest wave. Then we have an expanding flat in a wave 4, and then this is a wave 5 to the downside for 5 or C, which could potentially be the end, or then expect another low on lower volume before then continue to the upside. If we zoom out again and go to the medium time frame bearish scenario, then in this scenario we are looking for a wave C to the downside, which is an impulse, and then a 5-wave A, B and a 5-wave C impulsive structure. Most common target being between the 1 and the 1.236, between 27.2k and 26.4k, currently hanging around the rare target area for a wave C, which is the 0.618 taken from the high to the low of A to the high of wave B. So this is a rare target, and therefore preferably you will see more downside. In that, on the lower time frame, this being a wave 1, 2, and currently working on a bigger wave 3 to the downside, as I show over here. So in this scenario, we then have wave 2 retracing to the 0.5 after a zigzag, which is very nice. That's what you like to see. It is a very, very short correction though, compared to what you usually get, but it is definitely possible possible, as clearly on the chart that can be seen. And then now price is working on a third wave to the downside, where usually the minimum target for wave 3 is the 1.618, sitting at 27.8k. However, a wave 3 can be very extended to lower prices. And if we look at the support areas, then besides the 0.5 where price is right now and the support resistance flip that we have in this area, there's not much left. Yes, we do have a little bit of a point of control, which I have shown in the video, previous video at 27.9k, but that is about it. And the real support starts then down here around the 26k area for then the low of a potential wave 3, looking for a sideways structure in a wave 4, which then likely is going to be a long and shallow sideways structure, because wave 2 over here was very short in time and relatively like deep to 0.5. So you can expect a wave 4 to be now a long sideways corrective structure for then a wave 5 to the downside and then continuation back to the upside. Now, the question that I have on my chart over here is, where is the second wave 1 of a wave 3? And of course, in trading, nothing is perfect, else it would have been very, very easy indeed. But if we are looking at this to be a wave 1 and this a bit wave 2, then where inside wave 3 can we count wave 1? Is this wave 1, or do we have to count this as a wave 1 over here? Like, which of the pivots can be the low of basically the wave 1 that leads to more downside? This can potentially be a 1 2 1 2, like 1 2, you know. So that's not too clear, but what I'm actually saying in this particular scenario is that most commonly, if you have a wave 1 over here and then a 2, then a second wave 1 in a double 1 2 1 2 scenario preferably ends lower than the first wave 1, so that you get a diagonal structure and then a 1 2 1 2 and then the big move to the downside, where the second wave 1 of a bigger wave 3 is lower than the first wave 1. Now if we look at this pivot over here, then for the first time it got taken over there, but that is like a 3-wave structure, not a 5-wave move. So could this be a potential wave 1 to the downside in the making, before then a wave 2, and then you get the big 3 to the downside? That is up for grabs. We still need more info, but at least I do have this question in my mind. If this is a very big wave 3 to the downside and wave 1 and 2 are already in of a wave 3, so you then have maybe like 1 2 and this is the beginning of a big wave 3, you really want to see volume pick up, impulsivity. You don't want to see too long ranges. You want to see price moving impulsively to the downside to much lower levels, and also quick, because a wave 3 is usually the strongest, most impulsive wave in a impulsive structure to the downside. But I'm not like yet counting out or leaving it out of the possibilities that we get a wave 1 before then a bounce in a 2 and then a bigger wave 3. But of course, we don't have the information for that at the moment. If we look at trading psychology, what I think is quite interesting from a trading psychology point of view is that if in a bullish scenario, this over here would be the low, then what I can imagine at the moment is happening is that because price took this low over here, many people will likely sell. They are selling, afraid that price will dump to lower prices. Where many people may be like urging to buy, they might be willing to buy around the 27k, 26k area over here. So what's happening is that potentially over here, many people are selling but not buying. So if price then moves towards the upside, you're going to get people FOMO buying, thinking that price moves to the upside. And maybe it will, maybe it doesn't. That's yet to be seen. But I think from a trading psychology point of view, having a little bit of a move to the upside is not that bad of an idea and might even support the bullish scenario. If we look at the CVD divergences, then more locally we do have some bearish CVD divergences. We had them over here. They already played out as this low over here got taken, which was the target, so that's very nice. And at the moment, locally, it's quite neutral. This is the range over here. I'm on the 15-minute. And as you can see, there's not really any divergences going on. We have a bit, again, even more little bearish CVD divergences here from the high of the red candle, lower high on price, and then on yellow, higher high, and on blue, higher high. But this already played out as well. So it's basically neutralized, and we have to keep an eye on what is happening in the upcoming hours. And if we then finally look at the probabilities of the different scenarios, then as it stands, the higher probability move is still the bearish scenario on the medium time frame, and therefore also the low time frame and the micro, looking for a move to the downside for that wave C. But what you also see, and what I've written down is, yes, Elliott Wave probabilities are still higher probability to the downside for wave C, but if price is moving towards the upside and starts to take a couple of resistance levels and flips them into support, we might think differently. And also the longer we are ranging over here, the more bullish it becomes, because if this is a wave 3 to the downside, we want to see an impulse to the downside, a quick, fast move, no big retracements, like high volume to the downside. That is what we are looking for in then a 1, 2, 3, and then eventually a 4 and a 5. And if price is ranging for a long time, the longer it ranges, the more bullish it becomes. But at the moment, the higher probability is still towards the bearish side. I hope this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use in my opinion. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.